example, as I'm talking right now, I want you guys to do this. Let me know what are the stocks you want me to analyze right now. I'll show you the score. I'll show you the chart. All right, let me know. I'll probably have time for 3 companies right now. So let's take a look at 3 companies. Tell me what are the companies you want. I'll show you the score and I'll show you what are the charts. I can predict the chart pattern based on the score they have. All right, guys. So right now, maybe I'll show you a few first. Like for example, Supercomnet here, 7.22. Another one I saw, I was just looking at it, RGT. Right, RGT is also another one that came out very recently. This is a very recent stock that came out to be a high scoring stock. RGT Berhad here is 6.98, very close to 7. We like that. Yeah, it was a very low score, 4 plus points, and right now is very close to 7 points, close to 7 points, like 6.98. And Supercomnet 6.22. So what is happening to this to the chart right now? Let me just show you guys. So these are the chart that basically, these are basically the charts that looks like a growth stock. These are basically what growth stock looks like. On the long term, it always goes uptrend. It goes uptrend more than it goes downtrend. Simple as that. This is Supercomnet. And then more recently, RGT Berhad came up to be a growth stock. It recently became an uptrend, and this is how it looks like, from 15 cents, 20 cents, all the way up to now 50 cents. This is what a growth stock looks like. Let me show you another one. All right, Penta Master. What is the score right now? Let me see. Penta Master. Why am I not looking for Penta? Penta Master is 7.28. Another one, Johor Tin, 7.49. Let's take a look at the score. Sorry, let's take a look at the chart right now. Penta Master has been above 7 points for the longest time. A few years back, since 2014-15. You can see how it looks like. It goes up more than it goes down because of a revenue growth. Another one is Johor Tin. Very recently came up only. Johor Tin here is another one, good one, that we realize can be considered growth stock. It has a pretty ugly uptrend, but still an uptrend. And recently, because of its higher score, we have more faith, or we have more confidence in Johor Tin. All right, so this is the kind of stocks we want to look for to make at least 100% gain from these stocks within a 1 year time. All right, so let's see what are the stocks that you have right now. Right, we have Nick talking about Ocean Cash. Let's take a look at that. We have SPSP Pelican. And then we have XOX from Ian. Let's take a look at this company, Ocean Cash, Pelican, and XOX. Honestly speaking, doesn't look good. Pelican. Pelican is 0 points. My friend. SPSP. Pelican is 0. On a long term, if you hold on to this share, it's downtrend. You never hold on to this share as an investment. You hold on to this share for goring only. You go in, you make money, you get out. For companies that's not above 7 points, the worst case scenario is downtrend. The best case scenario is sideways. Accumulation phase. That's it. Pelican is lousy stock. Don't hold on to this. I hope you're not holding on to this. I hope you make money from this goring the shares. But as of now, it is all-time low. Right? Is it all-time low? Yep, it is close to all-time low. So quite dangerous, guys. So this one here, not so good. Let's take a look at XOX. You can buy, you can make goring earnings, but you don't hold on to that. XOX is 1.95. I think I talked about XOX before. A lot of people start buying the XOX can goring. We also got goring. I think we entered around 23 cents. But XOX is a lousy share. That means you don't want to hold on to this lousy share for a long time. Yeah, it did go up. Went up 23 cents. We got it at 30 cents. Basically, that's it. Right now, it is now going down already. These are the shares that you want to avoid because it goes sideways only. At most, it goes up for a short period of time and then it comes back down. Never hold on to these companies for a long period of time. XOX, no good. Nope. It's not a growth share. Ocean Cash used to be a good, what they call it, growth stock. But right now, is it a good growth stock? Ocean Cash Pacific is 2.67. Nope. Right now, it is not a good growth stock. So be very careful. Ocean Cash looks like this. I mean, it basically goes up a bit, but it's not much. In 5 years' time, it goes from what? 2014, 26 cents. 5 years' time, it goes up to 41 cents. Not much. It basically just goes sideways a little bit. But right now, thanks to COVID-19, thanks to whatever they're doing, which is felt, hygiene felts, they go up a little bit more. Ocean Cash is not a good growth stocks here for you guys to take a look. In the past, it used to be. For now, it has been going sideways for the longest period. From 2017 all the way to 2020, it's just going downtrend or sideways. Thanks to COVID-19, go up a little bit, but don't hold on for long term. Ocean Cash, not a good idea for a growth stock. There are better ones like UWC. Let's take a look at UWC. It's all the way uptrend since its IPO, and UWC has a pretty good score as well. UWC is 6.96, pretty close to 7 points. Alright, guys. So this is a growth stock report that you'll be receiving towards the end of the day. How you will take a look to judge your stock whether they have growth potential is to take a look at the score. Above 7 points, good. Below 7 points, not so good. All right, close to 7 points is also okay. Now, next one, I want to show you guys this screener. Now, this is the screener we use to find all the Goring stocks opportunity that we like in the market. I would like just to show you guys a few ways we look into all these shares. Okay, we look into all these counters and basically look for companies to Goring on a daily basis. You don't have to spend a lot of time analyzing the market. Like I said, 10 to 15 minutes a day. On Sunday, we just spend 1 hour to 2 hours. All we have to do is just to scan for these companies based on the screener that we have adjusted. And let's take a look at the opportunities we have today. So we have Ecovest, we have Hyaptek, anything lower than 1 ringgit, for example, we have Parkson, okay, we have Kanger International, we have JCY, we have Palo, we have Zelan, we have Technodex. I've never even heard of Technodex. We have Comacorp. Okay, that's not too bad. We have K-Star, which we have already entered about 14 cents to 15 cents. We have Kumpulan Perangsang. We have UWC is too expensive. We have Jatiasa. And then we have Gets Global. We have Tatgyap. We have Malton, interesting. We have Bina Puri. Let's take a look at all these companies now. One of the things that we have also managed to do for you guys is also to automate support and resistance. A lot of you beginners don't really understand support and resistance. What we do is also to automate the entire system already. So in this case, what we have here is to automate the support and resistance such that we straight away know for Bina Puri, we want to enter at 8 cents and we want to get out our TP1 at 9.5 cents. So for this one, 8 cents, 9.5 cents, if you guys are interested. Bina Puri. Next one here, Malton has gone up very quickly. If you want to enter, the best price for you to enter, the safest price for you to enter is 48.5 cents. Simple, done. Next one, Tatgyap, Dual MA, the best price for you to enter Tatgyap is 10 cents. Beyond that, don't try. Gets Global, let's take a look at this one. Dual MA, the best price for you to enter and try it out is 64.5 cents. Don't tell me it seems very difficult, but that is what our software is telling us. The best, safest price for you to enter is 64.5 cents. Without that, you will be risking a lot to enter those shares. JTSA is interesting one, 64 cents to enter. You get out half a position, TP1 at 73.5. Done, easy. Every day, just go through the same motion, look for all these opportunities, automate the support and resistance, enter the trades. You spend less than half an hour and 1 hour on a weekly basis to plan all these trades.